Ladies and gentlemen, good day and welcome to Hindustan Zinc first quarter FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jhalak Rastogi, Associate Director, Investor Relations. Thank you, and over to you, ma'am.
Thank you, Neera. Good afternoon, everyone. I welcome you all to Hindustan Zinc's first quarter FY24 ending 30th June 23 results briefing. In this call, we'll refer to Q1 FY24 investor presentation available on our company's website. Some of the information on this call may be forward-looking in nature and is covered by the safe harbor language on slide number 2 of the said presentation. Today on the call we have with us our CEO, Mr. Arun Mishra, and our CFO, Mr. Sandeep Modi. Mr. Mishra will begin with an update on business performance, while Mr. Modi will walk you through the financial performance, after which we'll open the floor for questions. I now request Mr. Mishra to begin today's call. Over to you, sir.
Thank you, Jhalak. A very good afternoon to all of you. Thank you for joining us today for the first quarter of FY24 results briefing. Before I begin today's results presentation, I would like to take a moment to share with you some of the key developments made at Hindustan Zinc this month, which is celebrated world over as Pride Month to promote inclusivity in all spheres of business. Diversity and inclusivity are extremely fundamental to our value systems and embrace the different perspectives, identities and ideas of our people. We have launched an organization-wide Zinclusion campaign. To celebrate the Pride Month, we organized empowering sessions with esteemed guest speakers from the LGBTQ+ community, Lakshmi Narayan Tripathi, an activist, actress, Bharatanatyam dancer, motivational speaker, and Ella Dev Verma, first runner-up of Miss Trans Queen India pageant under this campaign. Coming to our key priorities, on safety front, it brings me satisfaction to report a third consecutive quarter of fatality-free operations. Let me reassure all of you that we are continuing our efforts towards ensuring injury-free operations with even more vigor and alacrity in the present quarter as well. As a recognition of our management belief that people are our most valuable asset, I am happy to share that we have been certified as Great Place to Work for 5th consecutive year, a true validation of our commitment. At Hindustan Zinc, it is our continuous endeavor to develop and nurture our people with our best-in-class people practices. Adding another feather to its cap, Hindustan Zinc won the prestigious People First HR Excellence Award in the categories of Leading Practice in Talent Management and Leading Practice in Employee Relations. An update on our key priority, ESG, I am happy to share that Hindustan Zinc became the piloting member for Science-Based Target for Nature target setting, being the only one in India and the only metal and mining company amongst the member companies. We as a company have taken an ambitious target of 50% reduction in Scope 1 and Scope 2 emissions and 25% reduction in Scope 3 emissions by 2030 and net zero by 2050, and are progressing well in our sustainability journey via multiple pathways. Coming to an update on our on-ground CSR activities, it gives me immense satisfaction to inform that we are progressing well on our social sustainability goals, promoting sustainable livelihood via skill development. Hindustan Zinc's Kaushal Kendra launched 3 batches with 75 female trainees in 3 trades, including unarmed security guard, retail sales and marketing, and office assistant, with 100% placement for first batch and placement in process for the other 2 batches. I would like to share that 2 of our Zinc Football Academy players got selected in Rajasthan state team. Driven by our inclusive growth strategy, we can continue to strive towards making a positive impact in the community across the 7 thematic areas, including women empowerment, education, sustainable livelihood, health and water, environment, safety, sports, and community asset creation. A quick snapshot of developments made in the quarter are given on page 4 for reference. Moving on to the markets, the base metal prices continue to remain impacted by concerns around the global economy and other diverse macroeconomic factors. The global economy has been facing headwinds in the form of rising interest rates, soaring inflation, and slowdown in manufacturing and construction sectors in most of the world's major economies. Strengthening of US dollar also remains a key factor impacting the prices globally. The global manufacturing PMI has also declined to 48.8 in June as compared to 49.6 in May. The S&P Global India Manufacturing PMI dropped to 57.8 in June from 58.7 in May after rising sharply from 57.2 levels in April. Based on the economic indicators and outlook projections by IMF, India seems to be a bright spot for the global economy, and economic activity in India continues to remain resilient with a GDP forecast of 5.9% for 2023, offering one of the best realizations avenues for the outside world. This quarter, the global zinc supply and demand forces remained underperforming. However, the domestic demand for zinc continues to remain buoyant on the back of strong fiscal thrust on infrastructure and construction, further supported by robust recovery of the Indian economy, resulting in industrial production growth. Globally, there has been an imbalance lately on account of sluggish demand and market expectations of higher refined zinc production. However, with demand growth of 0.8% in calendar year 2023, medium-term global zinc demand outlook remains resilient. Touching briefly on lead prices have been range-bound and during the quarter averaging at $2,117 per ton. Weak demand due to off-season of lead-acid battery sector has balanced by the supply-side developments, including the impact of suspension of a Mexico-based mine. Domestic lead demand remains robust, supported by constant growth in automotive, industrial battery segment, and infrastructure development. Coming to silver, during the quarter, prices remained volatile, peaking early in April at $26 per troy ounce and closing the quarter with an average price of $24.1 per troy ounce. Overall, silver prices remain influenced by a combination of factors, including the dollar strength, gold prices, supply concerns, interest rate expectations, industrial demand, and geopolitical uncertainties. Silver demand is expected to be bullish, driven by evolving solar panel technologies, vehicle electrification, and investment in 5G infrastructure. Now coming to an update on operational performance, I am happy to report highest ever first quarter mined metal and silver production of 257,000 tons and 179 tons respectively, up 2% and 1% year-on-year respectively, with consistent refined metal production. I would like to bring your attention to the seasonality of the first quarter, which is traditionally viewed as a subdued one. However, we strive to neutralize the same by deploying structural changes made as a result of our continued learning over the years. Coming to a growth strategy for FY24, producing concentrate and metal as per our guidance remains the key, and scaling our smelters to achieve the same is a prerequisite. Further, there is a strong focus on cost optimization and production efficiency to strengthen our cost leadership globally. With our alloy plant ready for commissioning in Q2, we are targeting to enhance our value-added product portfolio significantly. On our investment front, I am happy to inform that all our projects are now coming on track. We are targeting commissioning and production from our alloy plant, Rajpur Dariba mill, and Fumer plant in Q2 FY24. With the current run rate of mined and refined metal, we are confident of delivering as per our guidance and would like to keep it unchanged. With this, I hand over the call to Sandeep for an update on the financial performance.
Thank you, Mr. Mishra, and a very good afternoon, everyone. As an integrated zinc producer, it remains one of our strategic priorities to continuously strengthen our cost leadership, thereby protecting margins, and this quarter was exemplary of the same. In the presence of such volatile LME environment, we persistently focused on our core principles, and as a result, we delivered a strong first quarter on the operational front, confining the external impact on our financial performance. I am happy to share that our cost reduction program has resulted in continuous cost optimization for 2 consecutive quarters, with a total saving of approximately $100 in last 6 months. Giving you a deeper sense of financial for the quarter ended June 23, revenue from operations for the quarter was rupees 7,282 crore, down 22% YOY, majorly on account of lower zinc and lead prices, lower lead volume, and differential strategic hedging impact, while benefiting from our volume delivery, improvement in zinc and silver, better silver prices, and favorable exchange rates. Sequentially, revenue was down by 14%, primarily due to lower zinc LME, lower metal and silver volume, partly offset by improved silver prices. Our cost of production before royalty during this quarter was $1,194 per ton, 2% better sequentially and 6% better YOY in USD terms. Ordinarily, you have noted the first quarter exhibits lower mined metal and higher cost of production. However, this quarter we could improve the quarter one cost sequentially for the first time in Hindustan Zinc's recent past. The improvement was mainly on account of softened coal and input commodity prices, better domestic coal availability, operational efficiencies, and better grades. You may refer slide number 13 for further details. The resulting EBITDA for the quarter was rupees 3,359 crore, down 36% YOY and 20% sequentially, mainly on account of lower revenues impacted by significantly lower zinc and lead LME, partly offset by improved cost and better silver prices. Sequential decline in EBITDA was further impacted by lower metal and silver volume. Please refer to EBITDA bridge from slide number 19 to 20 for further details. Our consolidated net profit for the quarter stood at rupees 1,964 crore, down 37% YOY and 24% quarter on quarter, primarily on account of lower EBITDA, partly offset by lower tax expenditure. As communicated in the previous quarter, the company has moved to the new tax regime from this fiscal year, and the effective tax rate for this quarter was approximately 25%. Coming to our cost and capex guidance for the fiscal year 24, we keep both our cost and capex guidance intact. We are confident of achieving the same on the back of rather placid input commodity cycle. With this, I conclude my comments and we open the floor for your questions. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for taking my question. First of all, congratulations for achieving reduction in cost QOQ, which is very unprecedented given the production volumes are generally lower. While I understand that, a bit of it is due to lower coal cost and possibly better linkage materialization. If you could quantify both of them, how much was linkage materialization in this quarter and your imported coal cost. Then part B of the question is that if I see the cost, COP per ton guidance, that is even lower in this, compared to the one that we have achieved this quarter. Is it a function of increasing production volumes, or you expect coal costs to further decline and linkage materialization to improve?
Yeah, Sandeep here. Thanks, Amit, for your question. So I would say normally if you see quarter 4 to quarter 1, if you see the last 5 years, our cost has been always increasing, and you are right, due to the quarter 1 volume normally remains lower because our mines start for preparation. And if you see in the last 5 years, it has been always 10 to 15% higher. First time we are seeing 2% decline, and if you see 2 quarters sequentially, it's $100. By and large, this is on account of the softened coal prices, both imported and linkage coal has improved, which was last year quarter 1, 10% in our blend. It has improved to 28%, and that is also coming 100% through rakes. So that has given a significant benefit in our cost. At the same time, our grades also have improved from the last year 6.9% to this year 7.1%. That is the second on the operational part where we have reduced our dilution and improved the grade. And automatically, this last 1 year, a lot of technology intervention were also done, which has improved our mills recovery. So it is a combination of the market, our own efforts, and operation efficiency. These are 3 factors on which we have worked upon, due to which we have got this cost reduction. And as far as my guidance is concerned, between 1125 to 1175, we believe that given the current our cost structure and the way we are working, we should be able to achieve our cost guidance for the full year. That will be near to the lower band of the guidance which we have given.
Wonderful. Thanks for the elaborate answer. So the second question is essentially on the mine development. How much it was on the account of revenue and capital?
So it was around 24 kilometers in this quarter, and 50% you can assume approximately for capital and 50% revenue.
Okay, great. Thank you and all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening, sir. So first, I'd like to some cost front.
Pallav, sorry to interrupt. Your voice is breaking. May I request you to come in a better reception area, please?
Hello.
Yes, go ahead.
Yeah. So firstly, I would like to commend the performance on the cost front. So given that the LME is not within our control, but we can try and control the cost. So also just on the zinc outlook. So given that prices for zinc have corrected more than other non-ferrous metals, so do we think that it should stabilize at these levels, or there could be some recovery in prices going ahead?
So if we have to comment on going forward, worldwide, there is inflation in US is coming down, and there is a hope there in infrastructure push that US government is doing will increase the speed of constructions. Chinese economy should work better. If you look at the stocks in Shanghai exchanges have gone down, while LME exchanges must have gone up. In India, the infrastructure push is on, and considering more states are undergoing elections, so the governments will further push, and the 2024 elections coming up, government will further push investment in infrastructure. So we believe that although Indian economy occupies a sweet spot in the global economy, so we will see good prices in India or even globally recovering towards the end of second quarter. And I hope that by December or January we will get much better LME than what we are getting now. I have always been saying that looking at global supply-demand scenario, anywhere between 2,900 to 3,100 is stable, and I think the journey is towards that only.
Sure, sir. So also on the cost front, sir, so are we seeing better coal linkage availability, given that the production has improved at Coal India? So do you feel that there can be further, a sharper reduction in costs in the coming quarters?
Not only coal, we see that Sandeep has explained. Partly it is, of course, because of coal. Also, we have restructured most of our operating contracts, working with the business partners to bring in much more cost efficiency, redoing the contracts in a much, much different way than the way we used to do earlier. And all those will start fructifying, because most of the contract, after placement and the partners mobilization takes about 2 to 3 months time. Most of those benefits will start accruing from quarter 2, quarter 3 and quarter 4 will see maximum benefits. And we can safely predict that our guidance cost numbers will achieve as a combination of both. That is, one is of course coal. We are fortunate getting more coal from Coal India. At the same time, the other structural initiatives which is on the performance efficiencies contracting, that will also start bearing fruit. And also we are working on recovery of metals in our mills. We will be commissioning the fumer, which will add some more product to our kitty. So all that will start bearing fruit in the quarters ahead.
Sure, sir. Thank you. I'll return to the queue.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead. Kirtan, may I request you to unmute your line from your side and go ahead with your question, please?
Hello, am I audible now?
Yes, you are.
Thank you. Thanks for giving me this opportunity. I had a couple of questions regarding the our new roaster at Debari and the fertilizer plant. How is this current progress tracking with your target, both in terms of timeline and cost?
We are absolutely on the timeline. See, the Debari, all orders have already been placed, and by the next week or so, the site work will start. Fertilizer site work has already started. Orders are in place. People have been mobilized. So both these projects, which are very key to our future, are already on, and we will achieve the commissioning of these projects well in time.
And what is the current? Could you also remind us about the current targets for the commissioning?
Roughly between 18 to 24 months for both the projects.
From today, it will take another 18 to 24 months.
18 months. Yeah. The roaster will be much earlier, maybe around 14 months, whereas the fertilizer will be between 18 to 22 months.
And in terms of this roaster, how does it compare with the existing operations in terms of its efficiency and the profitability?
So see, roaster only converts the concentrate into calcine. The efficiency comes when we start producing in the electrowinning process. So this is only to increase our calcine making capacity, and since our leaching section, or the electrowinning section, has got better capacity than the current roasters, so we will add more volume, roughly about 50-55 KT to our productions through this. But we have much more inbuilt roasting capacity. So going forward, our further growth will come when we will start investing more on our electrowinning and leaching capacity, depending upon how far we progress in our mining capacity. So we can clearly see a pathway of achieving 1.25 million tons in maybe another 18 months or so from FY24 onwards.
Understood, sir. And would it also be possible to sort of explain on the economics of fertilizer plant as well?
Fertilizer plant, see, it's now in the project stage. Post-project, mostly it will be DAP fertilizer it will produce, and we will be using our own sulfuric acid and a mix of rock phosphate, both from Rajasthan that we'll buy, and some may be imported. And then this entire area between Rajasthan till UP and parts of Haryana are importing about 1 million ton of DAP every year. And we will be producing in the first phase only 0.5 million ton, about 500,000 tons. So we should be able to supply to them.
Fine, sir. Thank you. I'll go back in.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question again. Have we done any incremental hedging, while the zinc prices were falling, or are we, unhedged as of now?
We are completely unhedged as of now. We do only strategic hedging. Last time we did when we believe that prices had gone to the top. So at this point of time, we have not any hedged quantity.
Okay. And if you could give some idea on the zinc international acquisition. Last time you mentioned that it has not been entirely called off. So what is the status on that?
No, so I think there is no further movement on that, and I guess whatever the rules allow will happen. As of now, I have nothing more to add as far as the past status was concerned.
Oh, okay. Thank you. That's it from my side.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yes, sir. So just a question on the premiums, on the physical premiums. So how has the trend been, sequentially? Have we seen any improvement in zinc and lead premiums?
Yeah, so our zinc premium have improved sequentially quarter on quarter. If you see in a YOY basis, the premium has bit down. And while this has been a global phenomena, And as you see, the LME also down, but sequentially it has been almost, I will say, 15% increase.
Okay, sir. And about byproduct prices, so how is sulfuric acid, how is the trend been over there?
Sulfuric prices, it's a combination of two things. One is geographically and also the sulfur index. So if you see YOY basis sulfur index, you can see the market has gone significantly down. So our acid prices also accordingly has taken a hit. However, sequentially, if you see, the acid prices have improved, but YOY basis, our acid prices has gone down on account of the globally in line with the market prices.
Okay. Okay, sir. Yeah, thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from the line of Pradeep from BFAM Partners. Please go ahead.
Hi. I had a quick question in terms of the general reserves to retained earnings transfer. Can you just update the status on that, please?
So general returns to retained earning was approved by the NCLT, and then it was also approved by the shareholders. At this point of time, the second motion hearing is yet to happen, which is scheduled on the 31st of July. So these procedural matters are still pending. So as and when it happens, we will have to intimate to stock exchange after getting the board approval.
Got it. And do you anticipate any hiccups in this process, or this is more like a procedural step that needs to be completed?
It's a more like procedural aspect because we don't have any secured creditors, so we don't feel anything hiccups would be there.
Got it. Thank you so much.
Thank you. Next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir, and thank you for taking my question. So I just wanted to understand, last year we were talking about 1.35 to 1.5 million tons of capacity. Since we have 1.2 or 1.25 in sight, so have we drawn up the plan by when we can reach what would be the capex? If you could just elaborate on the same.
No, first, as I said, after the roaster project is completed, we will launch expansion of our electrowinning process as well as our leaching process. So that should happen only when we stabilize on further production of mined metal. If that happens, because it has to be always looking at how much expansion we are having in the mine. So that is the next step is 1.25. Once 1.25 is achieved, we are on the design stage of expanding Jawar mine, which is currently producing 4 million tons to go to 6.5 million tons. And RD mine, which is currently producing about 1 million ton ore to go to 2 million ton ore. So these two expansions should take maybe another 2 to 2.5 years. So once those expansions are there, new mills come up, and by that time, if the smelting capacity reaches to 1.35, we should be able to do that. So if timeline, if I say we are talking of 1.25 in FY25, we may talk of 1.35 in maybe FY27.
Understood. And just a follow-up, so you are talking about Jawar expansion. So had the necessary approvals for the mine expansion are already in place, or that process is yet to be started?
Oh, no, we are already in the process of environment clearance, forest clearance, all absolutely in place, and people are working around it. In the meantime, designs have been done. You need to take forest clearance first to move the mining plan approval and all that. So everything is in place.
Understood. Sir, just if you could just give us the capex figure for this year and how much we have done in 1Q.
So our maintenance capex for this year is around $375 million, and we have done around $90 million in this quarter one. And from the growth capex point of view, which is largely the roaster and fertilizer, we have done around $50 million advance we have paid to the parties.
Understood. Thank you, sir. That's all from my side.
Thank you.
Thank you. Next question is from the line of Ashish Kejriwal from Nuvama Institutional Equities. Please go ahead.
Yeah, hi. Good evening, everyone. Thanks for taking my question. So, three things. One, is it possible to share what was the average realization we got for sulfuric acid in this quarter?
I think this is not the part of our standard disclosure, but this is in line with the market, what I can say.
Okay. Secondly, on silver prices, obviously you mentioned that you are not hedging any lead or zinc, but do you intend to hedge silver prices going forward, and what's your outlook on silver prices?
So silver prices, as you see, Mr. also said about the U.S. inflation. As the inflation goes down, these kind of metal, precious metal, actually prices increase. So we believe that the prices may hovering around between 25 to 27 dollar per troy ounce. And at this point of time, I want to be in a position to comment about anything about the hedging. It is a very dynamic situation, and as and when something will be crystallized, it will be basically in the best interest of the company.
Okay. Thirdly and last, on 3 or 4 years basis, government normally changes royalty rates on zinc, lead, or silver. So have you heard anything from the government that, soon they are going to change royalty rates on the same?
No. I don't think that is the case, because just by virtue of LME only last year, the governments got one of the highest ever royalties that they collected from us without having to do with the change in royalty rate. And I guess there is no push or no pressure on government as of now to change the royalty rates. Everybody knows that LME coming down to 2200 or 2400 is a temporary phenomenon. It will come back to 3000 again. So there is no pressure as such on government for this.
So, sir, when we are talking about that zinc prices can go back to $29,000-$3,000, means what gives us the confidence? Is it just because demand recovery or cost push? Or if I ask, what will be the last quartile of the world cost curve in zinc, which gives us a confidence that zinc prices can go back to $29,000-$3,000?
So if you look at world economy, so that there are no such, any core factor that has undergone a big change. Everything is same. Of course, U.S. economy saw a inflation push, but the Biden's infrastructure proposal coming down to ground, and in fact, if you look at cutting across party lines, senators and everybody taking credit of the infrastructure work is creating positivity. We see a big push in American economy recovery there. Europe, yes, it has, I think the difficulty of gas issues and all that was behind them, and now it will come back in a big way. But whatever happens in those economies, we are primarily focused in domestic economy, and as far as IMF reports are concerned, India still presents the best possible investment scenario for world money as far as manufacturing industry is concerned. And we are very hopeful with multiple state elections and then national elections next year. There will be huge push on infrastructure, which will see a lot of building of infrastructure projects, which will have further zinc consumption. So to me, the balanced status, which is between 28 to 3000, will always remain. It's not a big issue. This current situation came because of one, US, there was an issue regarding whether the debt ceiling will be breached or not. And second, people were not knowing what will happen to the Europe economy on a long-drawn Russia-Ukraine war. Now I think people have got adjusted. Whatever is happening on the geopolitical front is something everybody has learned to live with.
Sir, what is the fourth quartile of the world cost curve?
The fourth quartile of the global cost curve will be around $2,000. And if you read one of the mine of the Tara of the Boliden, they also had to suspend the operation on account of when the LME was around $2,250. So I think what we read from the media and the research reports, 90% of the mines will have to be shut down if the prices go below $2,000.
Okay. Thank you so much, sir, and all the best.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Next question is from the line of Pradeep from BFAM Partners. Please go ahead.
Yeah, hi. Thank you. I have a couple of follow-up questions. One, from a capital structure point of view, obviously we continue to have a net cash position, but that's kind of come down quite significantly. Going forward, is there any guidance that you can give to us, one, in terms of what kind of debt to EBITDA levels that you're comfortable with, and probably, any minimum cash levels that you would like to kind of retain on the balance sheet? That's one. And secondly, just some guidance from a brand fee perspective. We are at probably at 2% right now. Is there, an anticipation that in the coming years, given that at the parent level there are a fair bit of financing requirements as well, do we anticipate this going up? And is there a level at which you think that the brand fees can be capped at?
Yeah. Thanks for the question, Sandeep here. So if you see the debt to EBITDA, currently we have at the June end, we have a gross debt of 9,300 and cash of 9,700. And even at current level of the LME, if you see, we can easily generate the EBITDA of almost 11 to 12,000 crore rupees. So I won't be in a position to comment that debt to EBITDA what would be, but we are very comfortable situation, very strong balance sheet, and at current level of the LME also, given the volume and the cost structure we talked about, we can generate 8,000 crore of the cash during this FY24. That is with a certain assumption. And second, coming back to about your question on the brand fees, at this point of time, this is 2%, and anything for that, any change, I think this is a subject to the board approval, so I won't be able to comment anything on that part.
All right, no problem. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. I now hand the conference over to Ms. Shalak Rastogi for closing comments.
Thank you, everyone. With this, we close today's earnings call. For any follow-up questions or clarifications on the results, please feel free to reach out to Investor Relations team. Thank you.
Thank you very much. On behalf of Hindustan Zinc, that concludes this conference. Thank you for joining us. You may now disconnect your lines.